stop the presses. Before we go into our daily market commentary today, I completely forgot to say this, and so I'm recording it after I've done the DMC. Tomorrow morning, Wednesday morning, 7 a.m. Central Time, we're going to do a live daily market commentary. Join us for the live edition. The reason the live edition is so great is because you can ask whatever questions you want. This is a great opportunity. If you know somebody who's interested in learning more about trading, it's a great opportunity for them to see what a live trading room looks like. So please invite your friends. Join me tomorrow, 7 a.m. live. Now let's get to today's session. Yeah, Tuesday. What's up, everybody? Tuesday morning. Hope you guys are having an amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. If you're new to the channel, do me a favor. Click the subscribe button, hit the notification bell, become a regular viewer. If you are not new to the channel, then do me a favor. Leave a comment, leave a like, leave a thumbs up, leave something down there so that the computers know that people are actually watching and paying attention. So let's go ahead and dive in. What we do every day is we look at the same markets and looking for how these markets change over time with some really interesting moves yesterday. We had a couple of small losses. We had a couple of really nice runners. And so, when you've got a couple of really nice runners and a couple of really small losses, it turns into a pretty good day as long as you allow those runners to run. And so let's go ahead and dive in and take a look at those. So starting with the S&P. The S&P didn't really give us a good entry at all yesterday because what could have been the breakout, we just didn't get the basing in front of it. Now, in the overnight, right at the London Open, we actually had a pretty decent sized sell-off, and the markets are trading down just a little bit off of that sell-off in the London Open, so from 32.97. Now, when I go out and look at this on a daily chart, remember, I think that we're still trading up to this gap area, and that gap area to me is a price magnet. So knowing that that is a price magnet that's up there at 33.33, I think there's a good chance that that's eventually where we make it to. Now, I don't know if we're going to make it there today, tomorrow, or the next few weeks, but I think that that's kind of a price magnet where we could see price return, and we have a decent pullback in the overnight. Now, this pullback has led us to now a little bit of sideways price action and a little bit of basing. If we see that we pull back even deeper, you've got this area here, which was the origin of a pretty decent run early yesterday morning, that we could come back in and retest. But looking at my supply levels above me, remember my 4-hour trend is up. And so with my 4-hour trend being up, any supply level has to be pretty high quality, and it has to be a confirmation entry. So on the hourly, if I look at this supply level, if I consider this supply level, in a big picture upward trend, if I look at this supply level, chances are that this supply, since it was a new high, won't hold on a retest. Okay, that's pretty common. Is that a supply level like that won't hold on a retest as our impulsive moves get higher. However, the way to trade it, if you like that area, is to trade it as a confirmation entry because we're in a bigger picture upward trend. That's the only way that I can get in on that. Now, what about a short from here if you wanted to take a short and you think prices are going to fall from this level? Well, I would need some basing in here to give me a breakdown, and I just don't have the setup for that as of yet. And then what about demand? Well, what if I wanted to go long? Same thing. I could get some basing above here and trade it back up. Just know that I've got some supply up above me right in here. To me, the best case scenario is that I come up to this area and I do some basing and then I get a breakout. That's ultimately what our best case scenario would be for the most high probability setup. All right, moving over to the Nasdaq. So in the Nasdaq yesterday, our breakout trade wound up moving about 100 points off of this level. And then we came to a second breakout. And we got given the gift of a second breakout. 1, 2, 3, 4, 5, 6 candles later, the market had gone basically nowhere and told us, hey, you should probably hold off. We don't see a real strong move out of this piece. And so, yes, we set in a new all-time high in the overnights, as we did get a little bit above, but our breakout trade just didn't really amount to all that much because we went sideways up in there. So how can I short it? Well, rule number one is we don't short that all-time high. And so I'm not going to try to short against this all-time high. And, somebody put in the comments yesterday that, yeah, hey, I've seen all-time highs work for good supply levels. I totally agree. All-time highs might work as a supply level. I just think that too often people lean on shorting that all-time high because they think it's going to be a good supply area. When in reality, the best way if you wanted to short this thing would be to look for some basing right in here and get short after a basing breakdown. Now, my problem with that on a breakdown for basing is that right in here, I actually have what could be a decent area of demand on a reversal area for a bit of a retest. So keep an eye on that one for today if we come back into this range here. Let me make that a 15-minute color. Now, why do I make it 15 minutes, by the way? Well, because the zone is found on a 15-minute chart. So our 6-candle rule and the basing in front of the level would have to be found on a 15-minute time period. And so that's why it's important to look and say, are we doing a 15-minute or are we doing a 60-minute level? So that's the area, somewhere right around 10,940. I will say you've got a little bit of supply up here. So if you jump in a little early, demand right here, I don't think it's bad to jump in a bit early and maybe even draw your lines up here to 10,947. In the Russell, so in our Russell level, we had price pop up above this area here last night, but we didn't really do anything from there. So even if you took the breakout, 1, 2, 3, 4, 5, 6 candles later, you're still basically at break even. It just didn't really do anything. So even if you took the breakout, you're basically out of break even. But it definitely put in a bit of a I call this a Batman cowl. Very tight one at this point with these two wicks basically hitting the exact same number. And that's usually a very bearish setup. Typically, that setup is very bearish. So right now what we're doing is we're basing in front of this little area of demand, which means that this area of demand typically doesn't hold. And with that area not holding, this to me, if you want to look for a short, I think is your best market today to take a short on a breakdown right here. Provided we continue to get more basing, because I think if on a breakdown, I think we could easily see it make it down to like this 1487 level and pick up 8 to 10 points on this move. All right, moving over to our commodities markets, crude oil. So in crude yesterday, we had a confirmation short, and our confirmation short blew right through the level, which is somewhat frustrating because we literally had missed the short entry by a tick in the night before. But then we switched to a confirmation, and you can see why we switched to a confirmation, right? The market just blew right through that. But look at what it did. It came right up to our flip area, which is this goldenrod area up here, and we got a very nice move away. So if you took that level, then you're still in that trade. In my mind, you've got a decent move down. You may even get target one here at about 40.14, where I've got this wick over wick, but we've definitely moved about 4 to 1 off of that little level from last night's position. It did poke up above that level a little bit, so depending on where you had your stop, you may or may not have been wicked out of the position. Realistically, your stop has to go above this upper wick, and so price gave it one quick touch, so you may or may not have been stopped out above that level, depending on where you place that entrance. So if you did get stopped out, or you want to get into this and ride it, continue to ride it down, looking at this on the 15-minute chart, you don't really have any super clean supply up above us as a place to get in, and we have some demand down here that may cause a bounce. So one of the things that I want to do is, I'm looking at this area here, but in my mind, this area right here is a retest of this area here to the left, and this long green wick is what takes this area here and makes it less probable. I will say that if we continue to move down from here, that this then becomes a decent setup on a retracement. And it may get there here very shortly, especially if we move down from here to about 40.08 and then back up to 40.37, then you've got a pretty good setup. In gold, so in our gold levels, this is one where the confirmation entry just nibbed me a little bit because we came back to our confirmation entry and we didn't get deep enough for an entrance, and then we got a decent little move away. So what I'm going to do at this point with this area is notice that we've hit it once, we've hit it twice. If we can base in front of this level, this actually is the setup for a breakdown, right? Our 4 hour is losing a bit of momentum, a bit of steam. okay? And I'm not ready yet to take a breakdown, certainly, but if we get basing inside of this level, then it sets up for a pretty decent breakdown potential. If we get no basing, then you wait for the retest back up into this 1975 region. The only reason that I would say that that looks pretty good is because of the momentum that is slowing and the fact that we've hit that same level a couple of times. And so while we got a decent trade off of here the first time, the second time we weren't able to get in there because it didn't trade deep enough into the level, but it gave me a clue as to what it may do. And that's the way I want to use this. So look for this to break down later today around this 1975 region. If we get some basing in here. Now, what about the long here? Can I still take the long? You can. Technically, the long is still a valid trade. I'm going to remove the level, and the only reason I'm going to remove it is because I believe that we've hit it a couple of times, and my guess is that even if you take the long, you're going to get 6 candled out, and if you get 6 candled out, that's even a better setup for a breakdown. All right. Next, Nat Gas. Those of you that took our Nat Gas gap and go trade on Sunday night, that hopefully is your trade of the week, and it made your week because we gapped up and we were looking at after our gap up, we were looking at taking our stop, putting it here. Well, in yesterday's DMC, we said take your stop and move it to break even, and we came close, but you didn't get stopped out, and then we got an explosive move up. Now, so high of an explosive move up that it rallied us up into supply. The 4-hour supply that it rallied us up into, pretty good supply level. We blew right through it. Now, our trend is up, so technically that supply should have been a confirmation entry anyway, and it blew right through there without giving us a true entry. So now, what do I have as far as a chance to get back into this position? Well, first of all, this is a speed candle, and with speed candles, we anticipate that most of those speed candles get retraced, and this is a big old speed candle. So I'm going to put some lines around the origin of that strong move. The other thing that I notice is that yeah, we had a very parabolic move up. It's kind of slowed down just a bit. If we get back below here on a breakdown, remember I would still need the basing, but if you get back below here, you may get a decent little opportunity to short it down into 2.01 by second target 1.91. All right, copper. So yesterday's copper. So this is one of our stop outs from yesterday. We had a 15-minute level identified above current price, and I thought that was a decent little zone, an unbalanced wick over wick. Price came into the level, and then this is the way, when I get stopped out, this is the way I want to get stopped out. I mean, it just stopped us right out and continued to rally. And then it rallied up into our 60-minute area of supply. So with our 60-minute area of supply, your stop has to go above this wick right here. So you did come into it. However, 6 candles later, it had gone nowhere. So it told me I should probably get out of the trade with a small loss. And then in the overnight, it came hammering down. I'm not overly surprised that we're coming down because very similar to what looks like gold is doing, where that slowing of momentum in the 4-hour, I actually thought that we would make it down to this 2.75 region. And I think we still may. But it came up and stayed in my zone a little longer than I anticipated. So now what am I looking at? Well, now we're in a 4-hour sideways trend. On the hourly chart, because of yesterday's big move, straight up, the one that cut through our 15-minute level, you do have a little area of demand here for a potential reversal. So we can keep an eye on that one. But as far as supply goes, I don't have any super clean supply to lean on any longer. It'd be interesting to see if we get a basing in here, a little bit of a rally back up, and then one of these areas up here become a quality supply. All right, and let's look at our bonds and currency markets. So looking at our bonds and currencies, in the ZN, we broke out of this little triangle, but remember, we don't take the trade on the triangle breakout. We were just pointing out that situation did exist, and continuing to trade higher as the demand for bonds continues to go up, even though the yields haven't really changed. We're still seeing the price continue to rally. So a couple of demand areas below us that I think are still pretty valid. Nothing else to add as far as supply up above us. When I look at the Aussie, so here's our Aussie position. This was another one of our positions yesterday that gave us fits as it came down to our area of demand, and then 1, 2, 3, 4, 5, 6 candles later had gone nowhere, but reality, your stop should have been below this wick, and you just get barely stopped out. So that was another one. Like I said, we had a couple of small stop outs yesterday. Now, in the overnight, we rallied back up into this region. This region became an invalid trade before entrance due to this basing, right? Basing before the level is the kiss of death. And so we've now come up into it, and that's where immediately we popped right through it. So the basing invalidated that trade, didn't give us the right setup. Now, I will say that we're seeing a lot of upper wicks here, which is strong selling pressure. So look for price to roll over from this point. On a 4-hour chart, we've got a lower swing low, and if this becomes our lower swing high, then that's going to invite me to look for shorts moving forward. And we talked a little bit about this yesterday, how it looked like we may see a little rollover in our currencies. And that's when you have that happen, when you get that rollover and that trend change, that's why we took some small stop outs in our currency positions yesterday. The euro, nothing really came in on this level. We had a little setup. Next level, I think that we've got in the euro, if I go to a 15-minute chart, would be this area right up in here. That's a decent supply area. If we can make it back to that region, keep an eye on that one for a potential reversal today on a rally back to that zone. Now, I like that zone because we have a drop base, very strong drop, right? Those two candles in between show me that there was some unbalanced, an area of balance before that balance went away, and that's right at the European market close. So I talk a lot about the European market open, but sometimes the close can give you an entrance as well. Now, we do have a couple of other smaller levels up here, like this little wick right there. I think could be a decent area for a short as well, since we're seeing on the hourly chart those wicks that are telling me that there's some selling pressure, and then that big red candle. All right. Canadian dollar. So once again, remember we talked about those small stop outs. Here was the Canadian dollar as well. And that was a slice right through the area, and it came up and just I mean, there's no better definition for that. However, now on our 4-hour, my sideways trend is very, very clear that there's not a whole lot happening. And so anything I take, I just have to be aware of that, right? Now on a 1-hour chart, I do have a pretty clean wick over wick here below a pivot high that may come into play at some point today. And then the Great British Pound. So in our Great British Pound position, we actually did get price trading back into our supply level from yesterday and a very nice move away. So all the other levels we had a small stop out on. The Great British Pound has moved away now for about a 3-to-1 reward to risk. Your target is somewhere down in here at this 29.93 area. So keep an eye on that one coming later today. If I go to the 15-minute chart, the level that we have down below us right there at that 1.2993 is a slightly unbalanced, it's actually a wick over wick area right in here, where I don't have this other wick really penetrating into the body very much. So it's actually a little bit of a gap. If you think about it, right, that's a gap up, and then this wick is the filling of the gap. That's what those two wicks tell me in there. So not the strongest of demand areas, but it is a demand area nonetheless if price makes it back into that region. If you want to try to jump in on this short as it's moving down, I don't know that we're going to retest this area up here. If you do want to try this one again, it's going to have to be a confirmation entry. But I do think that this supply is actually the nicest one up here off of a 15-minute little level. Okay? All right, so the Japanese yen is our last market. And in the yen, we didn't come anywhere near our level of supply or our level of demand, and there's nothing more for me to add today because I don't want to change what we did yesterday. So when I look at my currencies, we got a small stop out on the Canadian, we got a small stop out on the Australian dollar, we got a really nice move on the Great British Pound. But the thing to consider is that, you know, depending on which markets that you trade or that you take, the Great British Pound win was greater than the Canadian and the Australian dollar loss combined, right? And then you add that into the Nasdaq position, as well as the natural gas position, and that's one of the things that we look for is you're going to take stop outs. Everybody takes stop outs. The question is, do I have some of the bigger winners to allow that price to continue to run? All right, well, it is, we went a little bit longer today than normal. Hopefully you guys got a lot out of today's session. If you have any questions, as always, shoot us an email, support@tradersarmy.com. Till tomorrow, everybody, I'll talk to you soon. See ya.